What's up, world? It's been a couple of weeks since my last update, and it's honestly just because I've been too busy to make any investments. So instead of investing $1,000 this week, we'll be investing $3,600, and I have my laptop here in the bathroom with me so I can walk you through one of the spreadsheets that I look at each week when deciding which sector of stocks to invest in. As I mentioned, I just haven't had time to make my investments over the last couple of weeks. And it's really too bad because if we look at the S&P 500, we can see that it's up 6.72% over the last 30 days. So I definitely missed out on some great gains there. This highlights the importance of regularly investing your money and really sticking to your schedule, which is one of the big benefits of robo-advisors. You can set an interval and you can set a specific amount of money that you want to invest on that interval, and they'll automatically withdraw that money from your account and invest it in a smart portfolio for you. I won't get too far into robo-advisors in this video, but one great one is Wealthsimple. I've included a link in the description if you want to check out Wealthsimple for yourself. I was using Wealthsimple for about 18 months before I started investing on my own with Wealthsimple Trade, and I just had a great experience. So I recommend if you're new to investing, you should check out that link in the description. But anyways, I now have a fair amount of money built up, $3,600, and I'm going to invest it all today. But first, I want to show you the spreadsheet that I use when picking which sector I want to allocate my money to each week. So this is the spreadsheet, and I'll put a link in the description, and it has 4 tabs at the bottom. There's one for tracking my dividends, one for tracking my purchases, one for tracking the holdings of all the ETFs I own, and my master sheet, which holds the approximate yield and current price for all of the stocks in my portfolio. I recommend that you check out my spreadsheet and just see how I'm doing my tracking, but I recommend overall that you create your own spreadsheet with your own calculations. One, so that you don't get any of the mistakes that might be in my spreadsheet, but 2, and more importantly, is that you understand all of the numbers that are helping you make your decisions when you're investing. But in this spreadsheet, the sheet I use the most is the purchases tab. On this spreadsheet, we can see the symbol of the ETF or stock that I purchased. For an ETF, I have the breakdown of the different sectors of their holdings. And shares purchased, the total shares, which is just the shares purchased times the ETF percentage if there is one. For a common stock like Target, we can see that the ETF holdings is marked as 100%, and 1 share of that is equal to 1 share in total. I then also have, if it's a Canadian or US stock, we have the purchase price, the current price, which is pulled from the master sheet, and then the performance and total current value of each stock. I have this Canadian to US conversion here as well, which I use for any of the US stocks. And how all this information comes together and how it helps me make my decision on what to invest in is just in this graph off to the right. In this section here, we aggregate all the totals for the different sectors. So if we look at real estate, for example, we can see that I have almost $900 invested. This $900 makes up 6% of my portfolio, and I have a target for real estate of just 5%. So then this sheet calculates how much bloat or overinvestment I've put into real estate. So this means I have $188 more invested in real estate than I had initially planned. So there's 2 ways to correct this imbalance. I can, 1, sell off $188 of real estate, or because I'm investing more money anyways, I can look at my underweight sectors and invest directly into those, which will dilute the amount of money that's being put into real estate. So the underweight sectors that we can see right now are finance, communication, consumer, industrials, and IT. So what I like to do next is just hop on Google and search the worst performing stock sectors of last week. The link that I usually use is this csimarket.com. And here we can see that financials had a very bad week, utilities, healthcare, transportation. And the reason that I'm looking at the worst performing stock sectors is that there may be new opportunities where stocks are looking undervalued if a sector has had a particularly bad week. And so we can see that I plan on investing $400 in financials this week anyways. And so now I'll look at ycharts.com to see if there's any stocks on the S&P 500 or the TSX that look like they're undervalued right now. So I'm back in the stock screener on ycharts.com, and I'm just going to create a indices filter on the TSX. And then I'm going to add in some columns, one for the current ratio, one for the dividend yield, one for the price to book value ratio, and one for the PE ratio. Now I'll add another filter which will just show me the financial sector of the TSX. With this list, I'm now looking for stocks that have a current ratio above 2, a price to book value ratio below 1.5, and a PE ratio below 15. You can get some more information on some of the criteria that I use when picking my stocks in a previous video called the 7 Rules of Investing. Using this criteria, we can see that the Toronto-Dominion Bank looks like it might be a pretty good deal right now. This is a stock that I've invested in the past, and I'm very comfortable with investing more money into it now. So I'm going to use my Wealthsimple trade app to invest $1,000 in the TD stock right now. Now I'm going to repeat this process for the IT and consumer sectors. I'll start off with consumer, and again, just in ycharts.com, we can edit the filter that we set for financial services and just move it over into consumer cyclical or consumer defensive. I'm going to go into consumer cyclical, select all. Using the previous criteria for current ratio, we probably would have filtered out Magna International. However, this is a company that I've had my eye on for a while, and I'm going to take this opportunity to invest in them anyways. They have a dividend yield currently at 3.88% and a payout ratio between 20 and 30%. And so the payout ratio is how much of their earnings they're using to pay their dividends. And between 20 and 30%, I think that their dividend will remain pretty safe throughout this process, even if their earnings start to decline. So I'm going to hop back into Wealthsimple Trade and purchase about $400 in Magna stock. And finally for IT is treated a bit differently for me because the PE ratios and the price to book value ratios are usually pretty high in this sector. But I do like to have some of these growth stocks in my portfolio, and 2 great ones that pay a small dividend are Apple and Microsoft. A couple of weeks ago I made some purchases in Microsoft, and so this week I'll be buying 1 share of Apple. Now finally, to hedge against any downturn that might come as we start to reopen the economy and potentially see more cases spring up, I'll be investing in ZAG, which is a bond ETF here in Canada. And so owning bonds is a great way to hedge against this downturn because as people pull their money out of stocks, they usually like to put it into bonds, which are traditionally seen as safer investments. The final flush is a quick overview of my investments for this week and the progress that my portfolio has made. Because you've just seen which purchases I'll be making for this week, we'll go ahead and we'll just look at my dividend progress over the last couple of months. Again, in this spreadsheet, we can see that we've now made a total of $74.81 in dividends, and April was our highest dividend month at $32.67. This increase is great to see because it means my dividend income is paying more and more of my monthly expenses. My overall goal is to invest $52,000 in 2020, and right now we're on target to hit the 4% dividend yield target that I've set for myself. I'll continue on the journey by depositing another $1,000 to be invested next week, and the bowl's refilled, so I gotta run, and I'll see you on the next episode of Bathroom Finance.